Today's top picks from the Breakingviews team. Peugeot's $1.3 billion cash call inspires confidence, and Spain replaces Italy as the Euro's bad boy. With me is assistant editor Peter Larson. We'll come on to the bad boy in just a second, Peter. This 32% discount seems quite steep, you feel. How come that washed?
Well, actually, I mean, talking of bad boys, I mean, Peugeot is kind of, all the car makers are the bad boy of the equity market.
True.
So actually, 32% looks like quite a lot for a rights issue until you sort of factor in the fact that this is a car maker, which is a troubled industry. Secondly, they're raising a third of their market capitalization, and they're raising this to fund capital spending in what is an industry with overcapacity as part of a broader tie-up with GM that a lot of people don't like. So when you take all those factors into account, to say a 30% discount to the theoretical ex-rights price seems actually not that bad, that the underwriters demanded. And even though this deal was leaked in advance and has been sort of anticipated, the 6% share price fall on the day also looks probably as good as Peugeot could have hoped for in the circumstances.
And that's what it was, 6% drop, was it?
It is. Well, it's what it is.
That's what it is now.
At the moment, yeah.
Okay.
Yeah.
All right.
And I think the thing is, you know, it probably suggests that for if you're looking at the equity markets and the ability for companies to raise equity, if a company like Peugeot with all of these difficulties is able to raise money on these terms, that actually bodes quite well for companies that are in a stronger position.
Okay. Let's get on to Europe's bad boy. It was Italy. If we're going to measure bad boys in terms of borrowing costs, it's now Spain. This isn't the first time, though, right?
No. Well, of course, for a long time it was Spain that was sort of seen as the next line of fire, and then people started to worry really about Silvio Berlusconi's ability to do anything.
Talking
in
of
Italy.
bad boys, sorry,
yeah,
I shouldn't have said
exactly. Yes, there's a lot of bad boys around, really. When you anyway, but he's now been replaced by a good boy, Mario Monti, and the markets have sort of rewarded that and have restored Italy to its sort of Italy spreads are now inside Spain's again for the first time since last August. Now we actually think that divergence could go further, really partly because even though both countries have new prime ministers and they both embraced reform, Mario Monti probably has more credibility with the markets than Mariano Rajoy has at the moment, and also Italy just has a fundamentally better position, has a lower deficit, and even though it has higher debt, it has a better current account position.
And hence you say the gap could widen further until Italy's election.
But that's the issue, right? I mean, a lot of it rests on Monti, and he's unelected and is only in place, in theory, for another year. So at some point, the markets will begin to focus on who comes after Monti. Will that replacement be able to have will they have a consensus? Will they be able to carry on delivering the reforms that Monti has put in train? And so at that point again, you could maybe see the sort of the bad boy stakes flip around again.
All right, Peter, many thanks for that. Peter Larson. For more agenda setting insight, watch our US Breakingviews show every day, 12:30 Eastern, 17:30 GMT. I'm Axel Threlfall. This is Reuters.